Coming up on Business Incorporated, Moody's forecasts 30% earnings growth for global metals and mining industry by 2022. Kenya exports to major African markets hit 8-year high. And South Africa under fire over resale of AstraZeneca vaccines. Hello and welcome to the program. I'm Chimeze Obi Iwago. Let's get the show started with the market numbers. Amongst the markets we track here in Africa, the JSE index in South Africa and the Nigerian All-Share index went sideways at intraday. While the JSE index jumped 2.49%, Nigeria's main index backtracked from recent gains and was down 0.32%. The market in Egypt closed for the week positive on Thursday, adding 1.57%. Kenya ended Thursday's session negative. And major markets in the Middle East are also closed today, but ended the week negative on Thursday. In the UAE, Dubai's index lost the most by 0.79%, while the Abu Dhabi index fell 0.32%. Elsewhere in the region, Saudi Arabia's main index fell 0.49%, while the Qatari index declined 0.244%. And in Europe, stocks advanced on Friday following higher global sentiment as investors focus on the outlook for growth and inflation and amid advances in COVID-19 vaccine rollouts. Chelsea, of course, has the details from the Frankfurt Stock Exchange. Hello, Chelsea. Good afternoon. Well, Germany is considering new travel restrictions as the country battles a third wave of coronavirus infections. What kind of rules are on the table now?
Well, Germany already has a lot of travel restrictions in place, but it's now considering new ones because of this new third wave that we are in. Some of the things that are on the table and that have been discussed are one, the federal government has decided to introduce a new testing requirement for anybody traveling into Germany on a plane. They are saying now that if you want to board a plane, you'll have to have this negative test before. In the past, only people who had been coming from high-risk areas were required to have a negative testing requirement. The federal government has also been considering whether it would be possible for them to actually ban people from going on holidays to some of these popular holiday spots. This comes after we've seen a big increase in Germans traveling abroad to places like the Spanish island Mallorca for holidays after this area was taken down to a low-risk area, so they no longer had a testing requirement. The federal government isn't sure if it's actually legal for them to do this, but it comes amid a lot of pressure on politicians to consider more travel restrictions because lots of people say it's not fair for Germany to have these very strict lockdowns while people are still able to travel abroad.
Now, EU leaders clashed yesterday at a summit meant to get the bloc's tumbling vaccine strategy back on track. Was there any concrete progress made at all?
Well, the one concrete outcome of the summit was that EU leaders did decide to back a new mechanism through which the EU could block exports of vaccines to other countries. This has been very controversial, really globally, and it set off a bit of a row diplomatically between the US and the UK. But the EU feels that it's being really taken advantage of by both its vaccine partners and other countries. The EU had been counting on a lot of vaccine doses from AstraZeneca, but AstraZeneca has really fallen behind on its planned delivery schedules as well. The EU has been exporting tens of millions of doses to other countries like the UK, and the EU leaders believe that other countries are not really allowing for the same sort of exports into Europe. So the EU has put in place a system in which they would be able to block exports under certain conditions, but there was still a lot of controversy at the meeting yesterday because some politicians here in Europe don't want to see this sort of export ban put in place because they really aren't sure what sort of retaliation we would face from other countries. So they do have this option, but it's unclear how much this is really going to change the shape of Europe's vaccine rollout.
Well, Chelsea, despite these issues surrounding vaccine distribution and the lockdown, sentiment among German managers has improved noticeably. The closely watched IFO Business Climate Index has risen to about 96.6. That's in March, and that's much higher than expected and the highest since June 2019. What would you say drove that sentiment?
Well, this is actually the second piece of economic data we've gotten this week that's shown really strong activity, really strong confidence among German businesses. A bit of a surprise given what we were talking about earlier, the lockdowns, the third wave of infections. Today, the head of Germany's public health agency warned that this third wave could be worse than the other two. So definitely businesses are taking a different message away from this. Really what's propelling the German economy right now is the manufacturing sector. German factories have been seeing very strong growth. Actually, in this survey, there was the strongest confidence level since 2010, and that's in part due to exports abroad. Many factories still continue to see very strong demand in Asia, in the U.S., and these other economies that are maybe doing a little bit better in terms of containing the virus. This doesn't really overlook the fact that the service sector here in Europe is still very much struggling and is likely to continue to do so because of the extended lockdown that Germany has recently introduced. Things like restaurants, bars, hospitality will also continue to struggle. But for now, the manufacturing sector seems to be really offsetting the other negative sides of this.
Well, I guess it's been a great but busy week for business across the globe. And so we can say, thank God, it's Friday. Let's continue to keep a track on those data there. And of course, COVID-19 and the vaccine rollout will, of course, make headlines next week. So keep a track on those. Enjoy the weekend. And in the UK, latest retail data shows sales only partially recovered last month from January's large drop when the latest coronavirus lockdown started and all non-essential retailers had to shut. Well, let's see how this data is being digested in the city of London. Let's talk to Juliana. Good afternoon, Juliana. Well, analysts at PwC have described the 2.1% rise in February sales data as a creditable outcome that showed some relief for the beleaguered sector. Are investors also trading in this data today?
Good afternoon, Chimeze. Yes, they are, despite investors across the world remaining very anxious about the blocking on the Suez Canal. The FTSE looks set to go into the weekend in positive territory, and this is not just down to the positive retail sales data we received early this morning, showing the uptick in February. I think most economists are putting that down to the fact that children started going back to school. We did start hearing this roadmap for recovery and for getting out of the lockdown by Boris Johnson. So consumer sentiment is up. Clothing sales is still pretty much down. But besides the retail sales figures, we also have that positive unemployment data at the beginning of the week showing that it looks as if the worst case scenario is finally over. We are starting to see more people get back into the office. And we had the flash PMI data for the private sector showing that in all sectors, growth is coming once again. So yes, it has been very good. And that is what is pushing sentiment today. So at intraday, the FTSE All Share is up 0.60%. The FTSE 100 is up by 0.56%. And the FTSE 250 is up by 0.65%. In currencies, the British pound is also rallying against the US dollar by 0.37%, up against the euro by 0.1315%, and up against the Japanese yen by 0.68%.
And in corporate news, Asda shop workers have won the latest stage in their fight for equal pay in a ruling that could lead to a £500 million compensation claim. Any response from Asda yet on this?
There has been a response from Asda, and it's a very long, very complicated story. In the UK, it's being billed as a watershed moment for predominantly female store workers and predominantly male distribution staff workers. It stemmed from a 2006 hearing in employment tribunal, and it was deemed that staff workers were indeed entitled to having equal pay to distribution workers. It's been back and forth in the courtroom ever since then. And just earlier this morning, Asda lost the latest Supreme Court hearing, which deemed that the predominantly female in-store workers had to be paid the same or the equivalent to those who are working in the back office. Now, Asda have responded. I do have a quote for them, and they said that this ruling relates to one stage of a complex case that is likely to take several years to reach a conclusion. We're defending these claims because the pay in our stores and distribution centres is the same for colleagues doing the same job regardless of their gender. So basically what has to happen now is that the staff who won this case, they will need to prove that they are basically of equal value in terms of skills and training to the staff that they're complaining against. And crucially, which is basically the crux of this case, they need to prove that they're not being paid the same wage because they're women. So it is a long-running battle. The staff seem to have won today's case, but the war is certainly still on.
And that's a complicated one. Anyway, this has been a week of data releases. You talked about the unemployment rate, the inflation, the PMI, retail sales, and so on. So what's on the radar for next week?
You're right, Chumi. You have kept me busy this week, haven't you, as always? But no, next week is a short week. It is the end of Q1, and I know British economists are going to be saying good riddance to that because, of course, they are anticipating strong growth in Q2. And it is a short week as well because it's Good Friday. It's the start of the Easter holiday, so pretty quiet on the data front. But we are going to be receiving more concrete data from the private sector. We have the flash PMI estimates this week. We're going to get the concrete data next week, Thursday, and we're also going to have a look at the nationwide house price index year on year, and that is expected to show that growth is still there, but it's definitely on the decline.
Well, it might be a quiet week, but I'm sure we'll have quite a lot to talk about. All right, Janetta, thank God it's Friday. Enjoy the weekend.
Thank God. Thank you.
And stocks in Asia Pacific rose on Friday, with shares in mainland China and Japan among the biggest gainers regionally. By the Friday market close on the mainland, the Shanghai Composite rose 1.63%, while Shenzhen Component jumped 2.597%. Hong Kong's Hang Seng Index gained 1.57% on the day. South Korea's Kospi advanced 1.09%. In Japan, the Nikkei 225 closed 1.56%, while the Topix Index rose 1.46%. Shares in Australia edged higher. The S&P ASX 200 closed 0.49% higher. MSCI's broadest index of Asia Pacific shares outside Japan also gained 1.39%. And stock futures moved modestly higher early Friday in the morning as Wall Street looked to build off a strong closing afternoon trade. Our futures contracts tied to the Dow Jones Industrial Average rose about 107 points. Those for the S&P 500 and the Nasdaq 100 also traded in positive territory. The move in futures comes after stocks bounced in afternoon trading on Thursday, with the Dow swinging more than 500 points as cyclical trades gained steam. The strong close broke a recent trend of poor finishes on Wall Street and trimmed the market's week-to-date losses. We'll take a break now, and when we come back, we'll look at other developments here on the African continent. To stay with us. And of all the challenges facing Africa's agribusiness sector, the failure to add value to crops before they are exported has proven the most intractable. Most African soft commodities are exported raw to global markets, and the processing industries that do exist locally struggle to add value, which may bring national prestige, but they require costly subsidies to survive and create little employment. With the COVID-19 pandemic now, which affected global economies, how badly did this really affect West Africa's soft commodities? Ted George, the Chief Narrative Officer at Close Advisory in London, joins us now to talk about this. Hello, Ted. Good afternoon.
Hi.
Good to see you.
It's great to be back. Thank you.
Now, yesterday, you moderated a panel at GTR West Africa Virtual Summit discussing West Africa's soft commodity trade COVID has caused huge disruptions to soft commodity value chains, blocking the flow of goods and financing. How has West Africa fared in this during this period, and what are the main challenges to overcome?
Well, I think the reality is West Africa has fared relatively well. If you bear in mind the crunching impact that COVID has had on so many of the world's value chains, a lot of the goods have continued to flow in West Africa. But I think there has been disruption. We've seen it at the borders. We've seen it at the ports. Even though there haven't been full lockdowns in West Africa, there have been curfews and restrictions. And this has clogged up a lot of the traffic. Another problem is actually about containers. Because the world's value chain flows have all been blocked up, a lot of the containers are in the wrong place. And this means it's getting more difficult to get hold of them, more expensive. And if you add in what just happened in the Gulf of Suez, which is blocked, the additional traffic expected in the Atlantic, there really is a huge blockages to uncover there. And then I think finally, the other challenge is how do you see what is going on the ground? It's been so hard for international companies to physically see what's happening in the value chains. And so as things loosen up, I think that, hopefully things will start flowing a bit better and we can address these blockages.
Yeah. Now, COVID has also resulted in many international banks pulling back from the commodity finance space. How has financing of West Africa's soft commodities been affected?
Well, I think basically there has been a real crunch when it comes to a number of banks which have pulled back from doing commodity financing. And then also we've actually seen, less confirming banks up there and a squeeze on some liquidity. But a lot of the big trade flows have been continuing. So I think, unfortunately, it's the usual suspects who have suffered. Small traders, SMEs, they only get around 20% of available finance for trade. And this is, really difficult for them at the moment. So that's where the efforts need to be focused. But the big level financing, that continues, even if it's a bit more pricier.
Now, both the EU and the US are developing stringent regulations against the use of forced labor in the soft commodity value chain. What impact is this likely to have on West Africa's soft commodity trade?
Well, it's going to have a huge impact because this is how business in the future is going to have to work. We can't act as if there are certain value chains in Africa, for example, where they produce cocoa or palm oil, where we don't really know what's going on, and then they enter the value chain and we're all trying to be green and ethical. They all have to be linked together. So in the long term, there will have to be much better traceability and much better transparency and monitoring of the value chain. That means using technology. We can't rely on people filling in questionnaires or a group of people visiting one tiny part of a plantation and saying this is what's happening in a massive region of hundreds of thousands of kilometers. So we have drones, we have satellites, remote sensors, smartphones. There are so many things that can be deployed, but that's what's going to have to happen because the proposed sanctions the EU and the US are talking about are severe. And if there are companies operating in the West who are exporting soft commodities from West Africa, they have to be able to prove that they have ethical supply chains with integrity. And to do that, you're going to need experts and technology to deliver it.
Absolutely. Well, Ted, it's always great to have you on the show. Thank you very much for your time. We do appreciate it. Be well and be safe.
Thank you very much.
And Care's exports to key markets in Africa rose to an 8-year high in 2020, defying delays at border points caused by efforts to stem the spread of the global coronavirus pandemic. Data collated by the Central Bank of Kenya indicates value of goods that were sold to other countries on the continent amounted to 243.68 billion shillings, a 9.07% growth over the previous year. According to the bank, the growth in value of trade between Kenya and Africa to the highest level since 2012 was largely driven by demand in smaller exports destinations on the continent. Nairobi is championing a plan to remove trade barriers among African countries to grow movement of goods, services, and labor through the African Continental Free Trade Area, which aims to create a market of at least 1.2 billion. And 6 of South Africa's leading medical scientists say the government's decision to sell 1 million coronavirus vaccines developed by AstraZeneca to other African nations is questionable because it had not determined their effectiveness against a variant that is widespread on the continent. The South African government suspended the rollout to health workers in February after a small study showed they were largely ineffective in stopping mild disease caused by a virus variant first identified in South Africa late last year. The vaccines were resold to other African nations this month. The sale comes as South Africa lags behind countries elsewhere in Africa and emerging market peers in vaccinating its people, with just over 200,000 inoculated to date. The country is the worst hit nation in Africa by the coronavirus, with 1.54 million confirmed cases and over 52,000 deaths. And Moody's Investors Service is projecting that the global metals and mining industry's earnings will increase by about 30% through the first quarter of 2022 on the back of economic recovery, as well as rising demand and tight supplies for steel, iron ore, and copper. Moody's says demand will recover more slowly for aluminum, a key metal for the global aerospace and automotive industries, while nickel and zinc supplies will increase as the constraints from 2020 ease and production returns to normal levels. The rating agency says outlook will be changed to stable if they believe consolidated global earnings before interest, taxes, depreciation, and amortization growth will slow to between 0% and 10% over the next 12 to 18 months. And on metal markets, gold prices were on course for a first weekly decline in 3 weeks as elevated Treasury yields and a firm U.S. dollar dented safe haven bullion's appeal even as the metal steadied on the day. Spot gold was flat at $1,726 per ounce, while U.S. gold futures were steady at $1,725 per ounce. The metal hit a one-week low of $1,721 in the previous session. Among other precious metals, silver rose 0.1% to $25.05, holding above an over 2-month low of $24.39 per ounce hit on Thursday. Palladium rose 0.2% to $2,614, and platinum fell 0.1% to $1,146. And oil prices bounced back in early trade on Friday from a plunge a day earlier on concerns that a large container ship that ran around in the Suez Canal may block the vital shipping lane for weeks, squeezing supply. Brent crude was higher by 0.7% at $62.38 a barrel after dropping 3.8% on Thursday, while U.S. West Texas Intermediate crude was down 0.8% at $59.05 a barrel, having tumbled 4.3% a day earlier. Both benchmarks are on track for a weekly loss of more than 3%, following a more than 6% decline last week. The trapped container ship is blocking traffic in the Suez Canal, one of the world's busiest shipping channels for oil and refined fuels, grain, and other trade between Asia and Europe. And that's a wrap on the program for today and, of course, for the week. Thank you very much for watching. I'm Chimezie Obi. Welcome.